Flexibility is everything.
Since the rates are dropping, we're witnessing a continuous decline in the mortgage rates, right?
Know your borrower like you know your friend. Just opens doors for brokers to do more loans and more submissions to AD Mortgage. Key here is listening. Give them what they're looking for. You have to then come up with scenarios. The borrower's ability to buy opens up.
And we're back to the studio. Mark, first of all, welcome back. Thank you very much for joining us today.
Thank you for having me.
Another digest, another episode, another great story to share, I would say.
More times in the mortgage business.
Right, beautiful. How's everything? How's business going? How's submissions? How's
Submissions
funding?
are going well.
All right.
AD Mortgage is continuously closing loans where others can't through our non-QM process.
Beautiful. I've heard that the rates are for conventional products are pretty low too. We're in the top 3 in the US, if I'm not mistaken, right?
We are probably somewhere in that neighborhood. AD Mortgage is trying to move more into the conventional agency markets, keeping our rates down and providing availability for borrowers to get their homes.
I'm, as always, happy to share some good news to our viewers. First of all, the rates are dropping, and that's where we're gonna start our questions.
Sure.
So since the rates are dropping, we're witnessing a continuous decline in the mortgage rates, right?
Yes.
How do you think this change will affect brokers' strategies, and what opportunities does this trend open up for them?
The key word here is opportunity. It will allow a mortgage broker to provide more opportunities to borrowers to get into the homes that they always wanted. As rates fall, it gives the ability for a borrower to qualify where they may not have qualified before, and just opens doors for brokers to do more loans and more submissions to AD Mortgage.
All right, Mark, since you are insanely experienced, could we please talk about some interesting case that you can share with our viewers that when you actually helped the broker to resolve?
There's many facets to the non-QM business that we do. Many opportunities vis-a-vis bank statement loans, profit and loss loans, debt service loans when you're doing an investment loan. A borrower came to us and was trying to do an 80% LTV investor loan. An 80% LTV investor loan requires a 1.0 debt service, which means the rent equals the mortgage payment, principal, interest, taxes, insurance, HOA. In this particular case, the rent didn't match with the payment. Therefore, the borrower was not able to get 80%. As an experienced AE or any of the AEs who work here at AD Mortgage, we are scenario busters. We want to find a scenario that could help this borrower. So in this particular case, we said, do you own a business? They did. Can you share with us the last 12 months bank statements, which you weren't doing before, which you do now? We received them. For me particularly, I did a review over the weekend of the 12 months bank statements and found, my goodness, they can qualify the borrower. So we were able to switch from a debt service loan where rent did not equal the mortgage for an 80% loan, but the bank statements worked. So we were able to transfer the loan to now a 12-month bank statement loan, take it off the debt service loan. We were able to lower the rate because 12-month bank statements are cheaper.
100%.
And get them to qualify. And we'll be probably closing within the next 7 to 10 days.
Beautiful. So that's actually a perfect case to share. So when we do a DSCR, it doesn't mean that if the DSCR ratio is going to be, for example, below 0.75, and we're from 0.75 to 0.99, and we're not fitting the LTV bucket, we can always try to use the income from the borrower to qualify, for example, with the bank statements.
And non-QM income,
Right.
not tax returns,
Right.
which obviously probably will not work, but a bank statement or perhaps a profit and loss, either no bank statements at 70 or over that with 2 bank statements for a P&L loan in other cases. But remember, our debt service program, DSCR, is pretty good. At 70% loan to value, it doesn't have to debt service. So if the borrower had additional money to put down, that could have solved that problem.
Right.
Or if they would have had 25% down, we could have solved it if the debt service hit 0.75. In each case, an AD mortgage, the AE here, I call them scenario busters. We want to make sure to get the right scenario for the borrower. In this case, we checked 80, didn't work. We checked 75, didn't work. We checked 70, and my goodness, the 12-month bank statement did. We have a closing now.
Perfect, perfect. Since we are on the topic of lessons, let's put together a checklist of useful tips for our clients to ensure smooth transactions.
Your average loan officer, which I was a loan officer for about 17 years before I became an account executive on the wholesale side. So key here is listening. So you walk in with your borrower, you sit down with them, listen to who they are, listen to what they do, listen to their needs. After listening to what's going on, you may want to take some notes and then move on to how to effectually give them what they're looking for. But sometimes what they wish may not be attainable. So you have to then come up with scenarios in order to allow the borrower to buy the home they want. But as a loan officer, you really want to take almost of a position of a doctor and a patient. Your borrower is your patient. You're trying to help them get the discharge, close. So the patient brings to you a problem, which is, I don't qualify for conventional lending, is maybe one problem. And we bring them the non-QM world, which has multiple ways of curing that problem. Doctor, patient, cure the loan, close. In cases where it's a full documentation loan, where maybe agency doesn't work, we do full doc here at AD Mortgage, but we have exceptions when you're doing it under non-QM.
Right.
So maybe the full doc may not work with agency, but it will work at AD Mortgage using our non-QM process. The rates are a little bit higher, but we can get exceptions using the income.
We're more flexible with the rate.
Flexibility is everything. Look at your borrower as a loan officer, listen to what they say, read the documentation, understand your file. So when you put it in, you know what's going on, and then if we ask questions from the underwriter side or from the AE side as we're doing scenarios, you're able to help yourself attain the commission at closing, obtain the home that your borrower is looking for. But it's important to listen, and even when you're listening, repeat back to your borrower what they said to you to confirm that's exactly where they are in their position, what they earn. Look at their documentation. Know your borrower like you know your friend, and you're going to get your friend the loan that they need and close the loan and move them into their home.
Sounds beautiful, and that's actually a book. This actually tips could be a book for sure. Mark, that was it, honestly. Like those are the most important questions that I really wanted to ask you. But that was pretty clear, and everything I believe right now is clear. Thank you very much.
Thank you for having me.
Dear viewers, I really hope that was another insightful episode for you. Please subscribe, please like the video, and don't forget to watch another episode of Insightful Digest. Thank you very much.